The following is a presentation of TFNN. Now, from TFNN, the author of Mastering Probability, Steve Rhodes, The Trader's Edge. You can call with your questions live and toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Steve Rhodes.
Wonderful Wednesday. Of course, it is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off up 14 points, trading at 18,068. S&P is up 2 points, trading at 2110. Composite up 7 points, trading at 5111. Russell's back 5 points. Gold's back $6, having tested a swing point. We'll go check that out. Silver down 26 pennies, trading at $15 and a nickel. Light sweet crude, she's back $1.42, trading at 51.62. Probably going to go test its lows. We'll go take a look at that as well. The news overnight, you got Celgene and Receptos doing a deal. Both are up today. You've got Anchor Pharmaceutical, PTC Therapeutics, LinkedIn. Chipotle is up. Medivation Inc. gets up to the downside. You've got Credit Acceptance Corp, Deutsche X Trackers, something or other. That's off 11%. Cracker Barrel, that's down $4 out there. Core Laboratories off a little bit. Amazon looks like down about $3. So, after a week of what seemed like a heavyweight championship bout of the year, I'm speaking about last week, each day, the S&P, the E-mini, was from high to low was like 35 points on average out there. I think even this past Monday, we had a 35-point move as well. So I believe we had 6 sessions in a row, 35 points. Yesterday and today are quite dull sessions, certainly compared to that. But so much energy was used by the markets out here. In fact, if we take a look at today's actually trading range, if we take a look at its opening range out here, it's really small. You're talking about from 2,099.75 to 2,100 to 2,104.50. That's a very tight range out there, 4.5 points. Right now, you're just really trading inside that. We're looking at a 10-minute chart here on my screen. If you're watching us on TigerTV, I'll just blow it up just a tad for you. And what I can tell you is that price inside this range right here, what's held as support, is the task market profile 120-minute setup setup out there. That support level inside the 120-minute is down at the 2,099.50. The point of control level at 2101 out there. So it's really set up from a bullish standpoint. And the top of that box is at 2104. You're trading at 2104 as we speak. Oh, no, you're not. You're trading at, what are you trading at? 2103 out here. So that's just, and price is just in a very narrow range. That's really it. So we'll go take a look at what kind of meaning there might be involved with that, if any. But we'll certainly go take a look at that. But the first thing that I wanted to do, and thanks for all those emails out there from yesterday's show and the show from the day before. What I wanted to do is, again, and just trying to maybe take a look at the stock market, take a look at a little bit longer term view so that you can get an idea as to exactly what the stock market is doing and why. And this way, you don't, it's not really this. To me, this is really all about pattern recognition. So this is about taking a look at patterns that you and I can rely upon, and there are many patterns that are out here. But if you are new to technical analysis, yesterday we took a look, and the day before we took a look at trend lines out there. And that is about as simple as you can get. Now, when I say simple, I don't mean simple. I mean in a positive way, right? It's just, sometimes just making things easy so that you can see them truly helps you to understand what the markets are doing. Now, we're going to change it up just a little bit. We're going to do simple, but we're going to do it in a little bit different fashion. And what's most important for us to understand about the S&P 500 are these two blue lines that are showing up on my screen right here. And they are somewhere between the areas of about 773 to 1552 out there. And what that represents is a long-term consolidation. That consolidation, by the way, out here takes you back into 1997, right? So it takes you to 1997. So between 1997 and, quite frankly, in through April of 2013, that's how long this consolidation went on. And price finally broke above that back here, April of last year, 2013. Now, with a consolidation pattern, we're looking at a long-term one here, but it works this way no matter what time frame it is that you, trade out here. So if we take a look at that, all you've got to do is just simply subtract 1552.87 from 773 to give you the approximation of what that consolidation is. In this case here, 779. Remember, you and I, we are like Captain Barbosa in that we use these as guidelines. Really good guidelines, by the way. Now, once you understand what the consolidation pattern is, then the cool thing about that is this. Your next move, if you break it either to the upside or to the downside, is what you and I refer to, or you and I need to refer to, as a measured move. That move is going to be equal to or greater than that consolidation level. So in this case here, the S&P 500 broke above 1553. All you and I have to do to get a price projection is add 779 points to give us our range. Well, that range takes us to 2331. You've heard me on this show use the level of 2350 out there. So it's around 2350 because we could really take it down to the 666 level, I suppose, if you want. I'm just giving you the conservative range out here. You're trading at 2111 right now. Now, look, that's one method for you and I to be able to determine where price is headed to. There's other ways for you and I to do that. There's that famous lightning bolt tool out there, that A to B equals CD pattern. And if we take a look at it, we'll throw that up on the screen here right now. Our A point happens to be the beginning of the move higher. And this is on the lightning bolt pattern. That takes you back into March of 2009 at the 666.79 level. The market makes nearly a straight line move up into the 1370 area, gets up into the highs back in May of 2011, makes a low, no surprise. You're not going to be surprised to hear this, when in October, right? October, you will never, ever treat October, especially after spending time with me, you will never, ever be afraid of October, of the September scares out here, because you will know that those are buying opportunities. The majority of time, those are buying. If you've got kids, just pass along one message to them. Tell them to put money in the marketplace the end of January and sometime around the beginning, middle of October out there. Those are the best two time periods for them to be putting chunks of money into the market. Now, obviously, you want to make sure that the market is in the bullish mode out here, which we are in right now. But if we come back to our A to B equals CD tool out here, what we can see is that price is above the 1.272 expansion. The lightning bolt, the A to B equals CD pattern, only makes a 1-to-1 60% of the time. Hey, that's not too bad out there. But folks, we've got to be able to identify what it's going to do the other 40% of the time. And if we take a look at that expansion, that A to B expansion out here, all that you and I really have to do is multiply that times our wonderful Fibonacci expansions of 1.272. Some people use 1.382. If that's what you like to do, go ahead and do it. I use 1.272. I use 1.618. I was taught that by the great master himself, Larry Pesavento, and of course he stole that. He didn't steal it, but he borrowed it from Leonardo DiCaprio. Fibonacci out there. And so what we can see is we're above that 1.272 level. That says you're going to go to the next level. Take it to the next level. As if I were going to sing as if we were the, oh, come on, who sings? That's the, Oh, come on now. How could I have a brain contusion like that? One of my favorite groups out there. In any event, we're going to take it to the next level. The S&P's next level is going to be 2213. Look, a 1 to 2 A to B equals CD, and this is not out of the equation at all, is the 2482 level out there, the 1 to 2 area. But the next area of resistance for the S&P 500 ought to be 2213. Now, what I can't do is tell you when price is going to get up there, but that's what the A to B equals CD tool is providing to you and I out here. If we take a look at one other tool, one other great tool out here, and they're referred to as our primary trading range boundary lines. These are the red horizontal lines that are going across my screen out here. And what I'm going to do is actually take a look at the solid lines. That's what I want you to focus on first. Now, this is a great tool that I was able to develop. It's slightly different than what the great Bud Ross had taught you and I in the marketplace, which was to be able to take a monthly chart, look for the largest number of co-located opens and closes. That means it doesn't matter whether the body of the candle is an open or a close out here, and use that as our visual, for one of our primary trading range boundary lines. Now, with the aid of mathematics, with the aid of tools like we have out here, software, was able to just simply go ahead and automate this system. And that means that my horizontal trading ranges are different on a weekly, different on a monthly, different on a daily chart out here because of the open and close. But you and I were looking at a monthly chart right now. And what I can tell you is that at the price point of about 1105, 1105.66 to be exact, and that's not really the exact number out here, but that's what shows up on my screen. There have been 27 occurrences of opens and closes at that price point since the 1997 timeframe. It's the highest trafficked area. The next highest trafficked area is at the 1326 level. That has 20 occurrences. Now, the beauty about these horizontal trading ranges out here is that once you know during the time frame that you're looking at where the largest number, the largest congestion area, the largest traffic areas of opens and closes are, all you have to do is then take that difference and add it to the next line and the next line and the next line, both to the upside and to the downside out here. Now, interestingly enough, those levels were calculated and created before the 2000 high, before the 2007 high out here. And you can see where price stopped. It's at that 1547 area. That red solid line, that's where price. So remember, price broke out of a consolidation. Couldn't do it in 2000, couldn't do it in 2007, but voila, it did it back here in April of 2013. You get above one of these levels, you come back, you test it, and maybe you reject it. You test the level of support and you go higher. Right now, all that's going on inside the market here is there is a congestion area. It happens to be that midpoint level. That midpoint level, if we take a look at the number, it's right around 2100.55. That's that little dash dotted line going across my screen. We get a close above that in the month of July. The month of August, the summer rally will continue. And you can look at my screen and you can tell me exactly where it's going to head to. The S&P 2211 before it starts to tire out again for a period of time. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 22 points. S&P's up about 2.5. Composite is up 8. Let's go take a look at where we're at in the summation index inside the price oscillators out here. Now, what you and I know, we absolutely know, is that the Dow got into jet propulsion territory a couple of days ago. That was getting above the 2.5 level out there. And once it does that, it gives both you and I the promise of higher prices. Doesn't mean that it takes place today or tomorrow, but it says to us that prices inside the Dow, they're going to get back to their all-time highs, and very likely they're going to go ahead and take those all-time highs out. Now, if we just simply take a look at this, remember, we just looked at consolidation patterns out here. There's a consolidation pattern clearly inside of the Dow. And that consolidation pattern probably somewhere around, well, I should probably get a little bit lower than that, but it's somewhere around, let's call it 17,000, well, call it 17,600. Let's call it what it is, 17,600 to 18,300. Somewhere right around there. So you're looking at about a 700-point move. So any close with conviction over the highs out here from May 20th, which are 18,350, all you have to do is add, what did I say, was 700 points. Just add 700 points to it. That'll take us up to the 19,000 level inside of the Dow. Now, just out of curiosity, I've got no idea. I didn't plan this or anything. I never really plan anything. It's just about sitting in the catbird seat and just communicate to you what, as I pull up charts, what it is that they say to both you and I. That way, it actually makes it kind of easy. I don't have to come here with any kind of agenda. Now, the interesting thing here inside of the Dow, we've got the monthly chart up on our screen. What you and I know is that it broke through at the 15,500 level, broke through a monthly level of horizontal resistance, that primary trading range out here. And right now, you're just in that midpoint level. That's what it's been spending the last 5 months, churning and trying to break through. And if and when it does that, then that says that the price target here inside the Dow is 20,533. So we go back to the daily chart out here, the sub-H index, the price oscillator for the Dow. We know we've got a consolidation pattern that's in play, gives us a 19th. That's just on a daily chart. Daily charts are going to give us different meanings than weekly, than monthly charts out there. But that's the current pattern that's in play. And that price oscillator getting above that 2.5 level was very bullish for it out there. And nice little V-ish shape bottom that we have out here inside of the Dow. Now, the New York Stock Exchange is a flirter out here. You talk about flirting with the boys. Boy, the New York Stock Exchange, what a flirt this thing has turned out to be. Now, what do I mean by that? Well, if you take a look at yesterday, you know that Stevie has been saying 150, 150, 150. We want to see that New York Stock Exchange get above that 150 level. And if you're looking at my chart out here, you'd say, hey, looks like it hit it yesterday. So close. So close, just a flirter. 144 was its exact number. That's not above 150. I need it to get above 150. In the case of the, I'm taking off to the moon, meaning till we've got acceleration, to the ability to communicate to you and I that you and I are going to see higher highs out here, higher price in the future. In this case, I am not Captain Barbosa. I want this above 150. Now, the mere fact that it's turned down a little bit today, that's actually no big deal. In fact, if you take a look at today's candle session, as we speak right now, it's got a lot of meaning. And the meaning is this. If you take a look at that candle session, it's an inside bar. That means it has not broached yesterday's high. It's trading with inside yesterday's candle. And if you take a look at other occurrences of inside bars out here, their meaning is pretty evident. More times than not, and more times than an A to B equals CD finishing 1 to 1 60% of the time, what you'll find is an inside bar. The message is that the pattern will continue out there. It's just doing nothing more than resting. And it's true if you go back and you take a look at your charts and you take a look at them on different time frames. You know, inside the New York Stock Exchange, you had an inside bar back here off of the bottom back in March of 2015 out here. You had an inside bar on March 17th. Market continued higher. You had an inside bar on March 19th. Market continued higher out here. Where other inside bars can I find out here? Looks like there was an inside bar out here on the day of April 24th. Market made a higher high out here. Inside bar after the market came down on the 28th. Market went ahead and moved down. So it's just a continuation signal more times than not for us. So don't be taking a look at the New York Stock Exchange and saying, hey, it's struggling today. Instead, take a look at it for what it really means. It got up to that pole vaulting level yesterday or very close to it. It's pulled back just a bit, but it's got an inside bar. Pretty good chance that come tomorrow that the trend continues to the upside. And we'll see if we can get that price oscillator up into that 150 level. And if we do, then the underlying message of the larger marketplace is higher prices to come. Inside the New York Stock Exchange, it says back up to its highs out there. This is Steve Rhodes with TFNN. We've got the Dow. She's up 19 points. S&P's up 2.5. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 20, S&P is up 2.5. Let's go check in on Goldilocks out here. Take a look at the current contract for gold, trading at 1147.60 out here. Now, what gold is doing, kind of interesting. Let me turn off a couple of things. Let me turn off several things on here, make it a little bit easier for us to take a look at. Turn off that rectangle box for the moment. And so as we take a look at gold, I turn off the volume. Okay, we got a wide enough shot here for gold. Now, what we can see, what gold is doing right now, or what it has done thus far today, is tested this swing point here from March 17th. The low of that swing is 1143.80. We've seen a price move down as much as 1141.90. We've rejected that, but you're still trading with inside that swing point. I don't have the volume on this current contract for what occurred back in March of 2015. I'm not going to waste your time and go back and try to figure that out at the moment. But we know that price is trading into that swing point. Let's just simply go down to a Let's go down to a 10-minute chart out here, and let's just see what was going on with regard to volumes as price was moving down into that area earlier in the day. So it looks like that spike was with volume back here at the 11 to 11:10 time frame, 8,456 contracts. So it looks like that level may get tested again, the bottom of which is 1141. So we just take a look at a daily chart. We take a look at a 10-minute chart out here. If this now, we were taking a look at earlier, we were taking a look at those horizontal trading ranges out here. So during the break, I just simply put up the continuous contract for gold out here. Let me get over to it. And the continuous contract for gold. Now, I've switched over to a weekly chart. Remember, the other chart you and I were looking at red. Red lines represent the monthly time frames. And we were also looking at a monthly chart. I went ahead and switched over to a weekly chart out here. And the weekly horizontal trading range boundary line that gold is likely to get down and test out here is 1111. I mean, it sounds like you want to go hit the craps table out there and roll the dice out here. And so that is your next horizontal trading range boundary line. That also will get you to test the lows back here in November of 2014. Now, today could be all that she needs to do is just simply test that low. As we looked at the daily swing, if we see any close below that, you're looking at most likely the 1111 area for the next test of support for Goldilocks. That's what's going on with it. Let's take a look at what's going on with silver, see if we can get any kind of feel out here. Well, one of the things that I had turned off, I'll turn it back on right now, this little rectangle. May turn off the horizontal lines, and then I'll blow this up just a tad. Now, what gold has been doing for a long period of time, I take you back into February 2015, it's really been trading inside this little sideways consolidation box out here. So, you know, what does that mean? That means that just like we looked at a consolidation pattern in the S&P 500, in this case here for gold, it's between, we'll call it 1235 to 1135. Let's call it about 100 points out there. Any break of these lows with any conviction, that could be another 100 points lower inside of gold, get you to the 1050-ish type area. So that's something that that we have to be paying close attention to. And that's what the daily, the 10-minute chart, that's what the weekly chart numbers are providing to both you and I. If we take a look at silver out here, high-ho silver off 26 cents, trading out at 15 and 5 pennies out here. Looks like silver's going to make its way back down to test the low out here, this little spike day low on July 7th, down at the 1462 area. 1473, I believe, was a significant swing point from the trading day of December 1st, 2014. But nothing really bullish about gold. Gold was never able to, from the body of the candle standpoint, ever able to break above nor below at this stage the actual body of the candle from the day of July 7th. It just simply has been trading with inside that. Actually, any close below the body of this candle in about the 1496 level is actually one of your continuation moves. Most candlestick signals either mean nothing, are reversal, and there's only about two that are really continuation pattern signals. This would be one of those, a falling 3 pattern out here, 2, 4, 6. It can still do it within the next couple of days and still qualify for that candlestick pattern. If we take a look at light sweet crude off a $1.40, trading at 51.64 out here, it's trading into that swing point where it made a bottom, little key reversal session, bullish engulfing back on March 18, 2015. And he closes under 52.14, which we've seen a couple so far. We've seen 2 or 3 over the course of the last week or so. Suggests that you go down and test the low. 48.71 likely becomes the potential buy point for light sweet crude out there from a trading standpoint, not from an ultra making a low type of you would have to do much more work on light sweet crude in order to make that determination. Currency-wise, we didn't talk about currencies at all yesterday, so let's do that, and then we'll go take a look at the ETF structures and see what kind of message they're providing to you and I. If we take a look at the euro, Japanese yen, you can see it's not really doing anything today. Hence, our market is not really doing much today. This is the currency pair that tracks the U.S. stock market, stock indice better than any other currency pair that is out there. It's not doing a whole lot today. We take a look at the euro versus the U.S. dollar. It's not doing a whole heck of a lot today as well. What we know about it is it broke its trend line, tried to get back in, was rejected, and right now dealing with the most recent swing point from a few days ago, July 7th, and it closed below 1.09. Price ought to travel down to about the 1.0819, the swing from May 27th out there. If we take a look at the Great British Pound, she is flat here today. The Great British Pound is doing everything it can to try to get back inside its rising price channel. Broke through that back on the trading day of July 7th. It attempted to get back in with a nice wide-ranging bar yesterday, a little doji-style candle as we speak right now. Still has not been able to penetrate and get back into that rising price channel. It is trying to do it, and if it is unable to do that, well, it certainly brings up a test of pulling back in that July 8th area one more time. If we take a look at the Japanese yen out here, trading at 123.85, the beauty about this is that it did break through a descending price channel. Its trend has changed, and this has either formed an A to B equals CD to the upside, and if it has, that pattern would look like this. If I could draw it on my screen, there we go. There's our A to B equals CD pattern. It would look like this. Your A point is the hammer candle. Back on March 26th, that made a significant bottom and low. Your B point out here on June 5th and your C point at this stage of the game looks like July 8th. Uno to uno, remember 60% of the time, 1-to-1 would take you to 127.94. We won't know whether or not it'll make it up to that level until we see how it handles 125.86. But you close above that, and if it doesn't anytime soon, you're going to see 129.99, Agent 99 from Get Smart out there, versus the move to 127.94. And that's what's going on inside of the Japanese yen. Now let's move over and let's go take a look at what's going on inside our index ETFs out here. Let's get a feel for what's going on inside the QQQ series. She's trading inside that swing point here from April 27. Now, that swing's got volume of 31 million shares. You're into it today with half the volume, with half of the trading session having expired. I don't expect we'll see another 15 million shares change hands today. Usually volume starts to drop off. We are in the summertime, vacation time out here. But nonetheless, as long as the Qs close inside 110.19, above 110.19, you're 110.56. Above 110.02. That happens to be the swing point low from April 27. Says you're going to go test the high 111.16. Only 31 million shares up at that high. Should be able to bust it out. And the last time we were up here was with 15.8 million shares on June 24th. And yesterday, you had volume of 22 million shares, 21.9 to be exact out there. So expect a test of the highs, 111.16 at a minimum, from the QQQ series out here. That is its message. The IWM, yeah, she's struggling here today, but is that really a big deal out here? The answer is no. If you take a look at yesterday's high, 126.50, today's high, 126.48. 2 pennies. By 2 pennies out here. Right now, we have an inside bar. We've already taken a look at inside bars and what they predominantly mean out here. And so, therefore, today inside the IWM, the message is, I'm an inside bar. And that means I'm going to go up to the next level. The trend's going to continue. Expect the IWM to get up to the 127.42 level. For as weak as people say the IWM is, that is a pretty darn strong looking V-shaped bottom at the moment out here. We'll see how it unfolds. You will look at my chart, and you tell me the last time you saw a strong V-shaped bottom like this in the IWM. And you know when it is, don't you? It was October of 2014 out here. And, of course, in October 2014, the IWM found its way to make it back up to its highs. Its highs were back from the September 2nd level. Expect the IWM to do the same thing this time around as well. And that's what's going on inside of it. If we look at the SPYs out here, the SPY up 23 cents, 44 million shares today. Let's pull this back and see what it is doing out here. It's made it to the 0.786 retracement level of its last leg down. That last leg being the June 18th high, down to a low, that hammer low out here from July 7th. That's really the key number you want to make sure you have written down on a pad of paper, 204.11. If we see it close below that, then that spells double trouble. But we're way away from that out here. In fact, right now, the SPYs are testing their most recent, or have tested today, their swing point. Let's go check this out. That swing point was from June 18th. That swing point had volume there of 165 million shares. We're going to fall way short of that today, so you're going to get a rejection. Well, I don't know how the day's going to end. A close below 211.17. Let me go ahead and we'll put that number on my screen out here. We'll put it towards the bottom, make it a little bit easier for you to watch. So any close below 211.17, which you're trading at 210.91, you can interpret that as a failure of a swing point on price and volume, because I just don't see it picking up 111 million shares in the next few hours of trading out here. So it's coming into that swing point light. Likewise, so. And he closed today above 211.17, and that says you go test the highs, 213.34. I expect we'll see that even if we have a pullback for a day or two out here, that the SPYs are going to go ahead and also make it up to their high. But nonetheless, you would have a failure on price. You could have a failure on price and volume inside of the SPY. Inside of the Dow Diamonds, 18 cents to the upside right now, 1.6 million shares. Another light volume day it is doing. It is having ringing its bell. Yesterday, looks like maybe a little bit better than yesterday. Yesterday, for goodness sakes out here, 2.7 million shares. Where were the buyers inside the diamonds? Nonetheless, what the diamonds are doing right now, they're trading inside the June 18th swing point. That's got 6.5 million shares. They have tested, let me see, did they test this little doji out here? I don't really care about that doji, just curious. That's a June 23rd level, 180.75. Do we get up to 180? We got it up to 180.72. So just shy of that mark out here. The diamonds want to head to 181.44 as their next move. So that takes care of looking at the 4 index ETFs for the markets out here. Let's take a look at some movers and groovers, movers and shakers in the marketplace out here. Let's go take a look at, Baidu. Let's go take a look at Baidu. Why Baidu? I don't know. It just stuck out 2.4% to the downside. What is Baidu doing out here? Let's pull this back. Clearly in a downtrend that has come back and test anything. No, it did not really. Did it form an A to B equals C to E to the downside or anything? Let's just check out, see what kind of patterns maybe might show up on our screens out here. What do we have going on inside there? Nah, it looks like Baidu probably headed to about the 171.66 mark out here. The most recent bottom, the most recent low. Let me pull this back a bit if I can. That's from the, and it's trading into it as we speak right now, was from July 8th. 6.4 million shares, but you are pulling back in that level with 2.2 million shares. Nonetheless, you close inside there. That means below 187.40, you ought to go test 178.81. That's inside of Baidu. If we go take a look at Cracker Barrel out here, how can this be trading lower? You folks that are, this is summertime. This must be, whoa, that doesn't look good. Almost looks like an island top, does it not? We got to check this out and see if it is. This could be a major. We're going to have to spend some time on Cracker Barrel, you and I. Why do we have to do that? Well, you know, the most bearish pattern out there, I would say, is, and it's not a Japanese pattern out here, Western pattern. It is the island reversal. Now, in order to have an island reversal, you need to have a gap up and a gap down. Well, we had a gap up from July 10th. That high out there was 157.36. The low of the next day, 162.33. What was the high today? 158. Son of a gun. When we come back, let's go take a look at Cracker Barrel, because it has a very bearish pattern. Of course, nothing more bullish than a failed bearish pattern. That's if Cracker Barrel can ever make it above 162.33. Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Question coming in here during the, I guess it was about half an hour ago, from Jamie in Green Bay. Jamie in Green Bay says, Steve, volume on the SPY has been very low and even lower as the market has been going up. Is this of any significance that the market continues to go up on a lot less volume? A lot less and less volume, or is it just because it's summertime? Well, we know it's summertime, so we can't discount that. And is it something to be concerned about? Is it of significance? Yeah, of course it's of significance. No question about it. It's of significance. But does it mean that the market won't move to higher highs? No, it doesn't mean that at all. Would you like to see more volume behind the move? Yes. Can we look at other time periods inside the SPY specifically and see where? Remember, volume is only one quadrant. There are at least 4 quadrants. The market is much like any table that you have at your house. Typically, most tables have 4 legs. The market has 4 legs as well. So volume only represents one of those legs out there, and we pay attention to all of them. But if you take a look at coming back even to March of 2009, if we take out, and I'll just take out a red arrow out here, and you can see volume, this is on a weekly basis, was moving lower out here inside the SPYs as price was moving higher out here. Take a look at some lows from, big high volume spike down here in August of 2011, and just simply take a look at volume. It was moving lower as price was moving higher out here. So it is not something that is unheard of, uncommon. In fact, it was the real study of volume that turned me on to understand and realize that the Qs specifically have made all of their most significant lows with volume. Now, I don't know if it's because of the way that the Qs are used to hedge positions or what it actually. I just know that it works that way. And I've shared that with you. We're not going to go into that now out here. So volume can have its different uses. Right now, the best way to use the volume inside of the Qs, by the way, is to go take a look for high volume lows, which, by the way, as the market was making this summertime low out here, we had another one of those high volume spikes in the Qs on the daily basis out here. Just trying to pull it up. It actually took place. Sometimes it doesn't happen right to the day, but we had 51 million shares back on June 29th out there. Then you had that little hammer candle that formed back here on July 7th. Now, the volume there was a bit lighter, 44 million shares out here. So, again, volume, one aspect of us taking a look at charting. There are other aspects, and yesterday, you and I, we went back through the summation index. We went back and took a look at the New York Stock Exchange, the wider breadth of the market out here, and we took a look at what happened every time that price oscillator's gotten above plus 150. We got to plus 144 yesterday, but you and I did this as objectively as you humanly possibly could. And each time we got above that level, prices went higher. Prices went back to their previous highs. Many times it went back and made new highs out there. And that's what is going to happen this time around as well out there. So, Jamie, thanks for writing. I hope that helps you as well. If we come back just simply to the main market out here, hey, we've got a couple of days here where, the markets are just simply taking a little bit of a breather. And my goodness, 6 rounds inside the ES Mini, 35 points on average from low to high each day. It was tiring me out. You can imagine that it was also tiring all of the buyers and sellers out. So, folks, stay tuned because our man, David White, is up next. He's that huggably, squeezably soft guy. He's going to give you his take on the market. It is different than my take. That's why we have bulls and bears. But I'm not buying when he's selling, and he's not selling when I'm buying out there. So that makes our two takes just a tad different as well. Have a great Wednesday. Look forward to seeing you tomorrow, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.